Good evening, students. Welcome to the session. Hope you utilize Saturday and Sunday in revising the direct tax paper. What we have done so far, not the entire paper, but what we have done so far, isn't it? Yes. Good evening, Manshika. Yes, have you revised? Good evening, Viraj. Good evening, Shankara. Okay, so if you have not, I will revise with you. So basically what we were discussing in the last two lecture was on the tax rates. Okay. So we had done the tax rate for the company, which was the different tax rates that we did. For individual, we have already done under 115 BAC. And secondly was the optional under the normal rates under Finance Act. So if you want to opt out of the 115 BAC, then only you can go for the normal rates of tax, which is under the Finance Act. So basically now 115 BAC impact is the default provision. Yes, good evening, Shailesh. Good evening, Mansha. So if you want to opt out, you can opt out only once in case you have the business income. And again, you can go back only once. If you have gone back once, then you cannot withdraw for 115 BAC scheme, right? That's what we understood. And then you have to forgo several deductions, exemptions, that what we studied. Yes, good evening, Mufita. So what deductions, exemptions like HRA, basically standard deduction is given to you, professional tax, entertainment allowance, then food coupons you have to forgo. Then basically what you get is the conveyance, traveling, transport allowance is what you get, right? And other than that, the depreciation you will get, but the additional depreciation will be disallowed. And then we saw that the set-off and carry forward of losses is allowed, but it should not pertain to these deduction. And the set-off of the house property loss will not be allowed. Then we saw the different tax rates for the company. The normal tax rate is 30% for the turnover less than 400 crores in 21-22 previous year. It is 25%. And the surcharge for them is 7% and 12% respectively. Then we have 115 BAA and 115 BAB. For the new manufacturing companies set up between 19 to 24, it is 115 BAB. And then for the normal companies, the optional regime is 22% under 115 BAA. And you have 15% under 115 BAB. But there are conditions under 115 BAB that it should be a manufacturing company, it should not be engaged in any other business, and the business should not be set up through the old plant and machinery. The exception is imported second-hand plant and machinery, and if the total value of the second-hand machinery is less than 20% of the total value. Yes, good evening, Simranjeet. So then only if these conditions are fulfilled, then you will get the 115 BAB particular 15% tax rate. Also, if you have any incidental income, or if not the incidental income, if you have any other income, then it will be taxed at the gross rate of 22% without any expenditure deduction. If there is STCG, LTCG under 111A, 112A, it will be taxed at those rates, but the surcharge will continue to be 10%, right? If you have the STCG on non-depreciable assets, then it is 22% and the surcharge is 10% under 115 BAB, right? In case there is the excess profits which are shifted over here due to the close connection with other person, then transfer pricing will be applicable and that excess profit will be taxed at 30%. In case you violate any of these conditions, then you will have an option to go to 22% tax rate. Under 115 BA, you have no other condition of setting up before this and this year, or it should not be a new company, no other condition like that. The only conditions are that you should not be claiming certain exemptions and deductions like 33AB, 33AB, 35AB, all of that, right? Scientific research, all of those expenditure you should not be claiming. And if you have violated any of the condition, you will be governed by the normal provisions of the Act, which is 30% or 25% respectively, right? And any other income will continue to be taxed at 22%. If it is STCG, LTCG under 111A, 112, 112A, it will be continued to be taxed at that rate, but the surcharge will be 10%. Yes, good evening, Simranjeet. Okay, so for the foreign company, the tax rate was 40% flat and the surcharge was 2% and 5% respectively. Yes, see how quickly I revise within span of 5 minutes. This is what I'm expecting from you also to do it. It's very easy to revise, okay? Because once you have studied, You have to just, make a mind map. Now, since I made the charts over here, it is running in my mind. Honestly, I'm not even looking at the screen where I've written those. I'm just looking at the screen where you are posting good evening. So I don't have that screen in front. But since the charts have been registered in my mind, I'm able to recollect that. And even you are expected to recollect like that. And that is why the purpose of making these charts and making you write is that you are able to recollect. And that is the purpose I'm using the section numbers repeatedly so that it gets registered with you. Are you with me? Yes. Shall we move further? Okay. So this is what we have discussed about the individual and the basically HUF, AOP, BOI, the tax rates remains the same for the individual. And for the basically company we have discussed. Now the left one is the partnership firm and the cooperative society. So the tax rates for that we are going to study now. Yes or no? Fast. Okay. So let's move towards the partnership firm. This is very small. What is the tax rate? You will only tell me. What is the tax rate? See, I'm moving the screen now. Otherwise, you will think ma'am remembers because she is able to see on the screen. How we will remember in the examination. You will be able to remember in the examination if you revise daily. Okay. So for the partnership firm, how is it defined? It means a partnership which is as defined under the Indian Partnership Act, which also includes the LLP. What is the tax rate and what are the surcharge? You know better than me. Please tell me fast. Yes. Yes, students. What is the tax rate? Fast. 30% Viraj? Yes. What are the surcharge rates? So the tax rate is 30%. You are correct. Yes. What is the surcharge? Yes. For the partnership firm, what is the surcharge in cess? Cess is 4%. I also know it. What is the surcharge rate? Yes, students. This much time for giving the surcharge of partnership. No, it's not 15%, Amir. Mufita, 30% is the tax rate, but what is the surcharge? Yes. So the partnership firm, the surcharge rate is directly 12% if the total income exceeds 1 crore. Yes, Viraj, you're correct. But we have just written 12%, but when it exceeds 1 CR. So surcharge, if my total income is greater than rupees 1 crore, this is 12%. Here we do not have if it exceeds 10 crore or something. Yes, Dhaval, you are correct. Amir, yes, right. Yeah, now you have given the proper answer, Viraj. If it income exceeds 1 CR, then it is 12%. Yes, correct. Okay. So that is about the firm and LLP also included. And even the local authority, it is same. Next, moving on to the cooperative society. Again, under the cooperative society, we have now the optional regime as well and the normal rates of tax. Normal and the optional. For the normal, there is the slab rate system where the income is less than rupees 10,000. It is 10%. If my income exceeds 10,000 but less than rupees 20,000, it is 20%. And if my income exceeds rupees 20,000 then it is 30%. Right? So this is the tax rate for the cooperative society. Now, there are two optional tax rates. One is for the manufacturing cooperative society. Similarly, like we have for the company. And the second one is for the normal cooperative society. So, this is to bring in line with the taxation of that of company. Right? So, the same way that we had it for the company under 115 BAB for the manufacturing companies, and this was for the normal companies. So, similar way, we have it for the cooperative society. So, even for the company, you can little bit modify the chart and write down over here domestic company, but you can write down this is the normal rate. One second. It will be easier for you to remember. Normal rate. So, how do I modify it? Yes. This is my normal rate. And then we have the optional rates, in which we had the manufacturing companies and then we had the normal companies. Okay. So similarly, we have something for now the cooperative society. Now for the cooperative society, for the manufacturing cooperative society, which is a resident in India, there are conditions, but the tax rate which is there is 15%. 15%, this is under 115 BAE. And for the normal cooperative society, which is under section 115 BAD, the tax rate is 22%. The tax rate is 22%. Right? Now, this is, as I said, very, very similar to the companies basically. So, for the 115 BAE, which is there, as I said, this is for the manufacturing cooperative society. This is for the manufacturing cooperative society. Now, they have to exercise the option of 115 BAE. Now, under 115 BAE, who is eligible? A cooperative society who is resident in India, engaged in the manufacturing or generation of electricity. So, resident cooperative society engaged in manufacturing or generation of electricity. Same like 115. Same what we had it under 115 BAB, right? Same thing under 115 BAE. It's same. And the tax rate is 15%. Then here also, what are the conditions? The conditions basically are in respect of that the cooperative society should be set up and registered on or after 1/4/2023. Set up and registered on or after 1/4/23, because this provision has come in 2023 Finance Act. So therefore, this is applicable from 1/4/2023. So understand that particular point very well. So 115 BAE is from 115 BAB was from 19 to 23. Whosoever is registered. This is particularly set up and registered on or after 1/4/2023. and it should commence the manufacturing or production or generation of electricity on or before 31st March 2024. Should commence manufacturing or production or generation of electricity on or before 31st March 2024. Okay. Again, here also same condition. Should not be set up by reconstruction or splitting up of existing business. Same. It should not use any old plant and machinery. Should not use old plant and machinery. Again, here the exceptions are very much similar. The exceptions are very much similar, which was also there under 115 BAB. That if I have plant and machinery used outside India, then that is still allowed. And in case the value of my second-hand plant and machinery does not exceed 20% of the total value of plant and machinery, the same shall be allowed. So exceptions: imported second-hand plant and machinery, and second one, value of second-hand plant and machinery less than 20% of total value of plant and machinery. So this is fine. Okay, so if you look at it, the conditions are same. So you do not need to remember separately. Only thing what you need to remember is that it should be set up on or after 1/3/2023 and the manufacturing should commence before 31st March 2024. This is the only condition that you should be remembering over here. Then again the similar condition over here should not be engaged in any other business other than the manufacturing or the generation of electricity. Right? Again here, what is the meaning of the manufacturing? The manufacturing will not include same thing: development of computer software, mining, conversion of marble blocks, bottling of gas into cylinder, printing of books, or production of cinematograph film, other than manufacturing or generation of electricity. Right? Manufacturing and distribution, you can write. Manufacturing shall not include, I'm copy pasting from above, this. Okay, you will have to write it again so that you remember. Okay, business of manufacturing shall not include this. Fine. Then what are the other conditions? The other conditions are, again, it should not be claiming any exemption under 10AA, additional depreciation, scientific research expenses. If you are paying for your own revenue expenditure, or in case you are incurring capital expenditure for scientific research, that is allowed. 35 AD, 80C to 80U, meaning for the cooperative society, there is deduction under 80P, which is also not allowed. You cannot claim set off and carry forward of the losses, which is in respect of such deduction, right? So same conditions will be applicable over here. Which deductions are allowed? 80JJAA is allowed, and 80LA, which will also be allowed here. Right? So you can just write over here the same points which we have written over here. Total income, these will be same. Okay, you can write down the same points over here. Now, as I said, here only one deduction which will be allowed is ATJJAA. ATM is not applicable for the cooperative society, so we will just remove that. ATA is not applicable for cooperative society. ATLA for IFSC unit will be allowed, but ATM, which was there for the companies, it is only there for the companies. The deduction is available only on the intercorporate dividend, which we will see in the deduction class, which is not applicable for the cooperative society. Are we clear up till now? Yes or no? Yes, Viraj, marginal relief is applicable for the firm. Good evening, Geeta. Good evening, Ravi. Yes. So 115 BAE is only for financial year 23-24. Yes, Shankara, you are correct. Yes. Any doubt? Any doubt? Okay. So these are the conditions for the 115 BAE. Now, this is for 115 BAE. Now, for the 115 BAD, we'll look at the conditions for 115 BAD. Now, for the 115 BAD, the tax rate is 22%. As I said, the tax rate is 22%. In respect of the conditions, what are the conditions for 115 BAD? There are no conditions. Similar to 115 BAA, here also under 115 BAD, there are no conditions of having the manufacturing business or in respect of setup, nothing like that. So you can write over here, no conditions of business or setup. Here you can write down business condition, setup condition, then plant and machinery condition. These are not present. The only condition which are there for the manufacturing condition, okay, the only condition which are there are in respect of total income without exemptions and deduction. This is similar to both. This is similar to both 115 BAD as well as 115 BAE. Other than that, there is no condition under 115 BAD. Fine. So everything else remains the same. Right? Now, under 115 BAD also there is no time limit for which you have to exercise, by which you have to exercise. So you can exercise 115 BAD at any point of time. So in case you have, let's say, brought forward losses or unabsorbed depreciation, which is relating to these deductions, you can claim that first and then later on also you can exercise 115 BAD. Now, very important point over here is, what if you fail to satisfy these conditions? What if you fail to satisfy these conditions? Then in case you fail to satisfy the conditions under 115 BAE, then in that particular case, the other provisions of the Act, the normal provisions of the Act will be applicable. So you can in fact go for 115 BAD if in case you fail to satisfy 115 BAE. In case you fail to satisfy 115 BAD, then in respect of that, again this option will become invalid and normal provisions of the Act will apply. So therefore, you can write failure to satisfy conditions, normal provisions of Act will apply in both of these cases. But at least for 115 BAE, option to go with 115 BAE. Okay. So in case you fail to satisfy these conditions, then in that case you cannot opt in for this particular provision. The provision will become invalid, and then you cannot apply this particular provision. Then you have to go as per the normal provision of the Act. Okay, are we clear? So similarly, if you remember under 115 BAB, we had the similar conditions, right? And there also I said that in case you fail to satisfy any conditions, then in that particular case, the option will become invalid and you can go as per the normal provisions of the Act. Okay? Yes? Any doubt? Okay. Next is about the AMT, about the alternate minimum tax. Again, there would not be any AMT applicable. So AMT not applicable in both the cases. In case you have brought forward AMT credit, you can of course apply and then claim the 115 BAE. For 115 BAE, any which ways AMT credit will not be applicable because it's a new company. Again, under 115 BAE, there is the same transfer pricing provision which was there under 115 BAB. Here also similar thing is applicable, that if there are excess profits which are shifted to this cooperative society by virtue of having a close connection with any other person, then the transfer pricing provisions can apply and the arm's length price will be applicable, and the income tax on that income will be at the rate of 30%. So transfer pricing, here also I'll just copy paste it. So transaction between a company claiming 115 BAB rate, which was there here. I'll just make the modifications over here. Transactions between the company claiming the 115. One second. What happened? So transactions between a company claiming the 115 BA. One second, I think some issue at my end. Give me a moment. Give me a second. I'm just restarting again because there was some issue with the tool. Because looking at so many provisions, even the option for 115 BAE is to be exercised before the due date for the first return of income when the company is set up, right? And so once this option is exercised, it will apply to all the subsequent years and it cannot be subsequently withdrawn, right? So to be exercised in the first year, to be exercised in the first year before the due date of section 139(1). Once exercised, cannot be withdrawn. Okay. And for 115 BAD, it can be exercised before the due date of filing the return of income. Okay. But not in the first year, it can be in any year. Before the due date of section 139(1). Again, here also similar thing. Once exercised, the option cannot be withdrawn. Okay. Fine. Now, one very important thing over here. What is that thing? That what will be the tax rates on the other income? What will be the tax rate on the other income? Now, in case the income is under 112A, 112, similarly, as it was there under 115B, AB and 115B, AA, it will continue to be taxed at those rates which are given in the specified section, but the surcharge will be 10% because here the surcharge will be 10%. So here you can write down surcharge is 10%. So effectively your tax rate will be here 17.16% as it was there under 115B, AB. Here your tax rate will be 25.168% as it was under 115B, AA. Right? So you can write down here. क्या प्रॉब्लम हो? हाँ, अच्छा, ओके, ओके, ओके. ओके, स्क्रीन विजिबल है ना? अच्छा. I'm sorry, students. I think I was just busy writing and I didn't see your messages. Okay. Now is the screen visible, students? I hope there was some technical breakdown. I hope now it is clear. Yes. Okay. So you can just copy it down. I'll take a pause over here. I've just written the surcharge rate over here and the effective tax rates. And maybe down I've written some more points regarding the exercise of option. You can just copy. I'll pause it for 1 minute. Have you copied, students? Yes, we will start with PGBP in some time, Simranjeet. Simranjeet, as I said, once you have gone under 115 BAA or BAB or then BAC, BAD, whatever, you cannot then withdraw. You cannot withdraw basically. Under 115 BAC, at least you can withdraw and then go back once, but for 115 BAB, AA, and AE, it is not applicable. Yes, all of you have copied. Shall we start then? Okay, so we were discussing about the other tax rates. So you can just write down then that in case of income taxable at specified rate, it shall be at specified rate. Example, 111A, 112A, 112, but the surcharge will be 10%. Okay, the surcharge will be 10%. Now, what about in case there is any other income? Like we had it under the 115 BAB. Right? So in case there is any other income for which no tax rate is provided, then it will be at 22% plus surcharge of 10% plus 4%. Are we clear? But again, it will be taxable at gross basis. So here you can write similar to 115 BAB. Here you can write similar to 115 BAA. Right? So below you can write any other income not taxable at specified rate and not incidental to manufacturing at 22% plus surcharge of 10% plus 4% without any deduction. Without any deduction of expense. Under 115 BAD, again it is same 22% plus 10% plus 4%, but expenditure is allowed. But expenditure is allowed. In case it is STCG on non-depreciable assets, same. It is 22% plus 10% plus 4%. Here also 22% plus 10% plus 4%. Okay, fine. And what about the surcharge for the cooperative society, which is taxed at a normal rate? So surcharge for the cooperative society, which is taxed at a normal rate, for them, the surcharge will be surcharge is going to be where the total income exceeds 1 crore but is less than 10 crore. 7%, just like companies, and total income greater than 10 crore, 12%. Right? Fine. Yes. So we have covered all the tax rates basically. We have covered all the tax rates and the entire basic concept chapter. Any questions, any doubt? I shall be taking it up now. Shankara, I have put it here on the screen. You can just copy it down. Meantime, I'm clearing the doubts. Okay. Mufita, yes, the notes will be shared. But as I said, you have to write down your own notes now only. Do not rely on these notes because once you will start writing, you will be remembering. Yes, any other question? Okay, now just one small thing before we move into the PGBP part. So basically understand one thing, that now under the basic concepts, we have done everything, right? There's small portion for the interpretation of the tax law. So basically, I'll just quickly cover it. It's very simple that way. So that is in relation to uh, the provisions, basically in relation to the interpretation of the tax law. So how the tax laws are to be interpreted. So there are general rules of interpretation, which is the literal interpretation, which means that you have to literally interpret the law. Attention must be given to what has been said and not to what has not been said. So if the words are unambiguous, you should not add something on your own. You should understand the law as is, right? So that is the first rule of interpretation. But if the words are not clear, then you can refer to the other rules of interpretation, like the golden rule, which means that you have to understand how the particular intention of the law is. If the words are not clear from the legislation, then the court can depart from its literal meaning and can look at the intention of the provision with which it was introduced. You can also look, that is also known as, one of the rule is mischief rule also, or hidden rule also, as to where we have to understand that why the particular provision was introduced, what defect it was trying to rectify, or what mischief it was trying to provide a remedy for, and how that intended effect of the remedy will be. Based on that, you can understand the provisions. Or sometimes you can adopt the, if there is ambiguity in two provision, one provision is saying something, other provision is saying some other thing, then you have to read the provisions harmoniously by reading the entire statute together. And if there are two views to any particular provision, then the one which is beneficial to the taxpayer, that view should be adopted. Then there are some other rules, which is like the adjustum generis, that the words belonging to the nearby words will derive the word meaning from that. We will learn about that when we will be doing the FTS clause. Okay. Then basically, the interpretation is also based on that whether a provision is a charging provision. For example, section 4 or section 28, which is a charging provision of the head PGBP, section 14, which is section 15, which is a charging provision for salary, section 22, which is charging provision for IFHP. So charging provision asked to be understood in a literal and strict manner. You have to understood as is. Charging provision should not be ideally ambiguous. It is laying out the charge, so it should be adopted, it should be understood in a literal and strict fashion. Machinery provisions are there, which are basically to implement, which are basically to make the act workable. For example, return filing provision, for example, the assessment provision. These are the machinery provision, advanced tax provision. These are making the act workable. So the machinery provisions should be interpreted in a way that makes them workable rather than which makes them basically otious, or which basically lead them to the fact that they are not workable. So it should not be like that. So machinery provision, if there is certain ambiguity which results while interpreting, it should not be the case that it becomes just defunct. Instead, the machinery provision should be interpreted in a liberal manner so as to make it workable. It should not be the case that if there's some ambiguity, we will say that we will not file the return of income. No, you have to understand the provisions to make the machinery provisions workable. Then there are penalty provisions. Now, penalty provisions should again be construed in a strict manner. And in case there is any ambiguity, the benefit of doubt should be given to the taxpayer. So then it should be understood in a beneficial manner so that the one view which is in the favor of the assessee should be adopted. There could be deeming provisions, section 9, income deemed to accrue or arise in India. These deeming provisions again are to be understood in a strict manner. A provision, when it is deeming something, it is to be understood literally. Nothing more should be added, because these are creating a charge again. It is more or less similar to the charging provision, right? So only the machinery provisions are to be understood liberally. Like as I said, penalty provision are also to be understood strictly, right? In case there are certain provisions which are granting some exemption, relief to the taxpayers, again, they should be understood in a purposive manner. You need to understand that what was the purpose of giving this particular exemption. And even if the provision is ambiguous, if a taxpayer is able to align itself with the purpose with which the exemption was granted, the exemption should be granted to that particular taxpayer. So these are to be understood in a purposive manner, the provisions giving the exemption or relief. Now, while interpreting the Act, you can also refer to the Finance Act, the marginal notes to the Finance Act. What are the marginal notes? Marginal notes are basically written besides the provision under the Finance Act, which or written at the end of the Finance Act, which basically explain the intent of the provision, which basically in, explain the intent of the provision, right? So they are inserted at the side of the section and express the effect of the sections which are stated. So they help you to understand the intent of the provision. Then you can also refer to the memorandum to the finance bill. So when finance bill comes, along with the finance bill, a memorandum is published. So memorandum explains why an amendment has been introduced in the act or why a new provision has been introduced. So when there is ambiguity, the references are made to the memorandum to the finance bill through which the amendment was carried out. Are we clear? So basically, you have to look at legislative history. You can also refer to the budget speech, which will explain as to why a particular provision was introduced. And that is how the act has to be interpreted, right? And then, of course, the salary and salary and house property you would have done at your IPCC level at great extent. So salaries is something which here it is very restrictive under the basic concept. The basics are only covered, and for the house property also similarly, only the basic things will be here which will be covered. That what are the deductions which are granted, that you have the gross annual value minus the municipal taxes, and the for the self-occupied property you can have two self-occupied property now for which you can have the nil value. Beyond that, it will be considered deemed let out property. For the stock in trade, uh, if the building is held as stock in trade, then in that particular case for 2 years from the end of the financial year in which completion certificate is granted, the value may be considered as nil. You will get interest on capital borrowed for the self-occupied property, which will be up to rupees 2 lakh. For the rental property, there is no such limit, right? So these are some basic provisions which are applicable. And of course, then now we will move to the PGBP if you do not have any questions. Okay. STCG on non-depreciable assets, yes. Vanshika, I've written over here. It's same as I said under 115 BAB. Yes, students? Fine. Okay. Shall we move on to the next topic? Okay. So let's write down. Now, this is going to be very, very intense topic. And this was just the basic. If you thought that this was difficult, this is the most extensive topic you will find in CA final, and very important topic. If you have understood that, then the other topics are just going to be cakewalk. Okay. So we are going to spend considerable time on this. Profit and gains from business or profession. Let's get started with it. So, as I told you that every head of income will have its own charging section. For example, salary had its own charging section under section 15. House property has its own charging section under 22. And likewise, PGBP has its own charging section under section 28. Now, what does section 28 talks about? What does section 28 talks about? So before we move into that, let's first try and understand that what is the business or profession? Because it says profit and gains from business or profession, right? Or let me just write down first 28. So the 28 says the profit and gains of any business or profession which was carried on by the assessee at any time during the previous year. So, what does section 28 says? Section 28 says that profit and gains from business or profession. So, basically, section 28 says is that the following income shall be chargeable to tax under the head PGBP, and 28(1), which is the general charge, because then you will see the specific charge also. It says profit and gains of any business or profession which was carried on by the assessee during the previous year. Okay, this is section 28(1). Now, before, as I said, we move into 28(1), we need to understand there are the classification issues which crop in. Ma'am, what is classification issue? It's not very simple to put the income under any one head of income. Whether the income is going to be PGBP, whether the income is going to be house property, whether the income is going to be salary, how will you determine? So these are known as the conflict of classification of income. Because it is not very easy to classify. Understand one thing, every head of income has a different way of computing the income. For example, under salaries, you have only the deduction, get any deduction for depreciation, for interest, and other stuff. If an income is an income from house property, if it is a self-occupied property. Whereas if you come to PGBP, you don't have any restrictions on these kind of deductions. There are maximum deductions which are allowed under PGBP. So it is very important to classify the income correctly. If you do a wrong classification of income, it will result in the wrong computation of income. Right? So we'll deal with one by one the difference between each head of income and the PGBP. So first one is salaries versus income from PGBP. Now all of your IPCC students, tell me when the income to you that yes. Don't tell them that you will look at the software and give them the answer. The software do not give the proper answer. Software is based on the inputs given by the users, right? So yes, ITR1 is for the employees, salaried person, and ITR4 is for the one who are doing business or profession. How will you decide if my income should be classified under salary or under PGBP? Yes. Yes, all the students you have done IPCC, right? And as a client, I'm expecting answer from you because I believe that you have done your IPCC and you're doing your horticulture. And you need to know the answers. You cannot take this much time. Otherwise, I'll be going to some other CA then. Yes, fast. Nobody's answering. Faster. How will you determine Mohammed fixed versus variable? So you mean that if I get the fixed pay, then I'm a salaried person. I should be having the income under income from salary. If I have a variable pay, then I should be classified as one who is doing business. No, because if you look at the contract of employment, you will see that there is always fixed as well as variable component. The salaries are divided. The salary structure, if you see of any employee, you will find that. Yes, Vanshika, you are correct that if there is employer-employee relationship, it is classified under salary. Yes, how will you define what is the employer-employee relationship, Vanshika? Dhaval, the question is, when do I classify the income under salary or when do I go to the PGBP? Yes, Mansha, you are correct. Employer and employee relationship chargeable to tax as salary. But what is employer-employee relationship? You know, these days, or when you become CA, you may have an option with certain companies that you can, choose to be a professional and get your income deducted under or get your TDS deducted under 194J versus 192. 194J is the TDS on professional income versus 192 is the TDS on salary. Now you may say, okay, I'm a professional, I'm getting my TDS deducted under 194J and therefore business profit should be there rather than salary. But you have to look at the contract of service basically, whether it is a contract of service versus it is contract for services. So you have to classify basically whether it's income from salary versus income from PGBP. You need to make a distinction between contract of service versus contract for service. Yes, very good, Mithila. Absolutely. Contract of service versus contract for service. Yes, the one employer-employee relationship, yes, Vinay, but what is the employer-employee relationship that we are talking about? So one needs to look at, as I said, the difference between contract of service versus contract for service. A contract of service is basically the employment contract, right? Where I engage and perform services on the terms and conditions of my employment, right? So basically a contract of services that I would be basically engaged on these terms and conditions. I would not have basically that flexibility. And contract for service is basically in relation to an independent contractor. So a contract of service is usually between an employer and employee, and contract for service is basically a professional contract which has been entered into between two independent parties. So there I may be governed by the terms and conditions for which I've set for my own self. Let's say even if you look at the contract and the contract would say that this is an independent person, but you will see sometimes in the contract that there are certain conditions attached to that person. Now, if these conditions which are in the nature of getting the work done in a way that I have my requirements, let's say for example, I'm hiring an interior decorator. Now, I will have certain terms and conditions for the interior decorator that, you should be working in my office or you should be, doing the interior designing of my home only during, let's say, 10 to 6 p.m. You're not allowed to work beyond that or you're not allowed to come before that. Now, this is a particular condition which is attached to get the work done in the way I want it to get done. But that doesn't restrain him from working as per his rules, or that does not undermine his independence in any manner. So, if the contract is only specifying the nature of the work and how it is required by the client, the compensation, it is a contract for service. So, generally, the service provider will retain his independence. He is not bound by, or I am rather not bound by the work that he is doing, or he is not answerable to me in terms of how he is putting his time. So there could be restrictions even in the contract for service, but they are independent in nature. They have control over their business. They are not answerable to me in terms of how they are doing the business. So they what I'll tell them is that this is required to be done in such manner, but how it is to be done and by what time it is to be done and in what manner it is to be done, that it will be taken care by them. So they can also provide the service to more than one person at a time. But whereas in the contract of service, you are bound by your employer. It is an employment contract. You are answerable to your employer. It's basically you are bound by the instructions and orders of your employer. There is a control and supervision, right? In the contract for service, there is no control or supervision to that extent. The contractor will have discretionary power, right? So the test is to determine whether I'm working under the supervision and control and the directions of my employer. Are we getting that? So that is a difference between, or to classify between the income from salary versus business profession. Under the business profession, I am going to bear the fruits of my effort, whether it could be profits or it could be losses. Whereas under the salary, I will be only getting the remuneration which is predetermined. Even if I put in more efforts, I'm not going to reward it on a higher end. I'm subject to the control and directions of the employer. Are we clear? Yes. So, Mansha, full-time, part-time, that is not, um, the deciding line. Of course, full-time, part-time can both result in the employment contract. Okay. Yes, Vanshika, employer and employee relationship exists when a person performs the work under certain terms and conditions for the remuneration. Okay. So basically, what you need to determine is contract of service versus contract for service. Whether subject to control and supervision or not. Okay. So that is how you will decide whether it's income from salary or versus income from PGBP. Second is income from house property versus income from PGBP. Let's say for an example, I have I'm let's say a particular person who has like a lot of properties with me and I am in the business of leasing those properties. So whether it's going to be PGBP or IFHP. So I have the business of leasing the premises, whether it will be PGBP or IFHP. Okay, Mohammed is saying PGBP. Okay. Geeta also says PGBP. Dhaval, leasing should be considered as PGBP. Okay. Mithalia also thinks it's business income. Okay, most of the time are saying business, PGBP. Mansha, PGBP. Okay. Anyone says house property? Shravanan, you are saying house property on what basis? Viraj, no. Assessee does not have the option to choose the head. These are charging sections and these are to be construed strictly. You do not have the option to choose the head. Vanshika, my question was whether if I have the business of leasing the premises, PGBP or house property. Rajiv, you're taking PGBP. Okay. So, Vinay, no, whatever is beneficial to the assessee, no, it's not like that. It doesn't work like that. These are charging sections. And what did I tell you for charging sections? These are to be construed strictly and not in a beneficial way. Okay. So now let's understand over here whether it is PGBP or whether it is income from house property. Now there are three decisions in this context which are very important. Now you will ask me, ma'am, whether these decisions could come in exam. Yes, you can have the question which will be a full-fledged sum. You could be given under the P&L that income from leasing business is included in the profit and loss account. And in that case, whether that should be included as PGBP or whether it will be excluded and taxed under IFHV, this is what you will then have to decide. So, the Supreme Court decisions are there in this context. You have to remember the name of these judgments. Chennai Properties and Investments. Supreme Court ruling. First one is Chennai Properties and Investments. This is one. And there is contrary view in Raj Dadarkar and Associates. Supreme Court. Now, these are in fact not exactly contrary views. We can reconcile the two decisions and we will reconcile the two decisions. But the conclusion is different in both these decisions, and that's what I have written in two different color pens so that you remember. One is Chennai Property and Investment, second is Raj Dadarkar. But before that, before I venture into decisions, I would like to point out what does section 22 says. Because you have to always look at the charging section. You know, the same case was for even the salary. Under the salary, as I said, the salaries charging section, what does it talk about? It says that income shall be chargeable under the head salary, which is any salary due from an employer. So basically, it was asking to have the employer-employee relationship, what all of you correctly mentioned. So in order to get into the salaries, there should be the employer-employee relationship, right? So in order to get into the salary, there has to be the employer-employee relationship. Whereas in order to get under the income from house property, what does section 22 says? Section 22 clearly talks about that the annual value of the property will be chargeable under the head income from house property. other than the property which is occupied for the purpose of business or profession. So if I'm occupying the property for the business or profession, if it is for my own business or profession, that will not be chargeable to tax under PGB, under the IFHP. But what it says is that annual value of any property, whether it is a residential, whether it is a commercial, will be chargeable under the head income from house property. So section 22 is clearly providing me that annual value of property will be chargeable to tax under the income from house property, other than the one which is occupied for my own business. Now, in Chennai Properties and Investments Limited case, the Supreme Court observed that the assessee had the business of holding the properties and earning the income by letting out of those properties. They looked at the memorandum of association of that company. And it was observed that the main object of the company was to hold the properties and earn the income from letting out. And therefore, the business of the assessee was to rent the properties and earn rental income. And in that situation, it was held that the income from leasing of the properties would be taxable as the business income. So in Chennai Properties case, it was clearly held that the income which was earned was from the systematic activity which was carried out by the assessee. The object of the assessee was to acquire properties and earn the income by letting out the same. And in that circumstances, one can say that it is the business of the assessee to do that. So here the assessee is incorporated with the objective of developing those properties and then renting it out on lease. And therefore, this particular income is to be treated as income from business or profession, because this is the business of the assessee. So you can write down if the holding of property and leasing out is business of assessee, this will be PGBP. This will be PGBP. Are we getting that? So basically, in Chennai Properties case, it was held that if the business of the assessee is holding the property and leasing it out, this will be considered as PGBP. And then there was the contrary ruling in Raj Dadarkar. In Raj Dadarkar, the Supreme Court said that the rental income has to be assessed as income from house property. In Raj Dadarkar, rental income is to be assessed as income from house property. It was held like that. Why? So both are Supreme Court rulings, and still in Raj Dadarkar, a contrary verdict is given by the Supreme Court. How come? So there is one more ruling, Raila Corporation. I'm not giving you so many names because otherwise it will be too confusing for you. But Raila Corporation follows the Chennai properties case. So Supreme Court in Raila Corporation also gave the similar observation where the assessee company was engaged in the business of leasing out of the property. Income is the business income. Whereas under the Raj Dadarkar case, they held it differently. In Raj Dadarkar also, the assessee basically had the property where it constructed the shops and stalls and gave to the different people on lease basis. So, why did the Supreme Court arrive at a different conclusion in this case? Here, the Supreme Court observed that a particular income has to be classified in one of the heads. And based on that only, your computation will get affected. Right? Now, it is possible that a particular income may fall under more than one head. There could be overlapping. And then you have to decide in which head of income it has to be finally classified. So you have to apply the test for determining the nature of the income, the real nature of the income, based on the interpretation of the two heads. So normally, if you look at section 22 covers the annual value of the property. So normally, income from leasing out of the premises, the rental income, is taxable under income from house property. If the person is the owner of the property, he is earning the rental income, it should generally be classified under section 22. Right? However, in certain circumstances where the income is from the business of letting out, where the income is derived from the letting out of the premises, if the letting out is the business of assessee, it can be classified as the business income. So, if you look at Chennai property case, there the object clause under the memorandum clearly mentions that the assessee's business is that of leasing. Whereas in Raj Dadarkar case, it was a partnership firm. There, the object clause was not correctly mentioning that what is the business activity of this particular partnership firm. Because it was just saying that, yes, one of the object is renting and subletting of the property, but the partnership can carry out any other business as may be mutually agreed upon between the partners. So it was not clearly discernible from the partnership agreement, the object clause under the partnership agreement, whether the activity was in the nature of business. So here the assessee could not prove that whether he was actually engaged in the business of renting out of the properties. And that is why here the Chennai property case was distinguished. In the Chennai property case, the assessee was able to prove that the business of the assessee was letting out of the property. Right? Here in the partnership agreement, that clause was not put up well. Are we getting that? So that was not, the assessee has not been able to establish Raj Tadakar that he was engaged in any systematic or organized activity of leasing. Whereas in Chennai property, it was very well proved based on the memorandum of association. So here you can write down, because the object clause not clearly reflected that assessee was in business of leasing properties. So in case the question comes up in exam, if the question says that the memorandum has this object, then you can classify it as business income. But if it is not very clear, then it will be house property. Anju, it's not about the risk and the expenses. It is whether you are carrying out the systematic and organized activity of leasing out the property. That will be determining whether it's PGBP, because only then it will be classified as business. Clear? No, Vanshika. Section 22 does not discriminate between a commercial property and a residential property. Okay? Intention of the assessee, yes, Mithalia will determine under which head. Shankara, the Supreme Court judgments, the judges are of the highest knowledge. They do not take any consultations. Only the lawyers argue. No problem, Gajar. I understand. It's absolutely all right. And these are recorded. So, of course, you can watch it later as well. Yes, Mansha, very clear. Okay. Fine. Now, next one. Capital gain versus PGBP. Okay, before we move to capital gain versus PGBP, one more important point over here. Property held as stock in trade. So if my property is held as stock in trade, just now I told you that if my property is held as stock in trade, then in that particular case, it may sometimes, happen that I am a builder. So house property you can write, instead of property you can write house property held as stock in trade in case of, let's say, builder. So I may have certain unsold inventory, right? I am in the business of developing the premises and selling. So house property is my stock in trade. Now what happens is that my building units which are there, the flats or the offices, may lie in my stock in trade because these are not yet sold. Now, if you know, only 2 properties can be considered as self-occupied. Beyond that, there will be the deemed annual value, which will be assigned. Now, in case where the property is consisting of any building or land which is held as stock in trade and it is not let out during the year, In such a case, the annual value of the property shall be considered as nil. The annual value of property shall be considered as nil for a period of 2 years from the end of the financial year in which completion certificate is received. So this is as per section 23(5). So what does section 23(5) says? Section 23(5) says where the land and building is held as stock in trade, the annual value shall be nil. The annual value shall be nil for period of, okay, when land and building is held as stock in trade and is not let out, okay, for a period of 2 years from the end of financial year in which completion certificate is obtained. Okay, until the completion certificate is obtained, the building is not even completed. So how can you expect to generate the value? Let's say my building is not yet completed, it is still under construction. So I cannot obviously let out. I can only let out the property once it is livable. That is the first principle. Only after the completion certificate is received and for a period of 2 years, if I have not been able to sell off, it is still lying in my inventory, I am not even able to let out, I can have the annual value nil. Now you may think, ma'am, this is a very theory question, right? No. In fact, in one of the exam, the question was on real estate project and was a very comprehensive question where ICDS on the construction project was also targeted and these points were also targeted. Now there could be a question for the real estate developer where you may have that this particular property is lying as a stock in trade. The builder has not been able to sell off, let's say 5 flats. The fair market value, not the fair market value, the annual value based on the rentals which are generated in the market, basically the gross annual value may be considered as, let's say, rupees 2 lakh. So there you will have to write about this section 25. Right? So there could be a comprehensive question on the real estate developer, where one of the point can be regarding the leasing income which is there. So you will apply the Chennai Properties or Raj Dadarkar interpretation which has been set out by the Supreme Court and apply to the facts of the case to answer. Second point could be on the flats or the units or the shops lying as the stock in trade. And there you will have to write that this is the this will be considered as nil and the fair value will not be considered as a gross annual value. Are we getting? So these are small points, but very, very, very important. So I'm enlarging Vanshika, understood? Okay. Okay. Now is it visible? Vanshika, Gajar. Fine. Okay. So let's take a small break before we move to capital gain versus PGBP. Okay. Let's take a small break of 10 minutes and then we get back. Okay, students, let's get quickly started then. Any questions still you have? Okay. I will request them from the next class, Manshika. Okay. So let's get started then with next part, which is in terms of capital gain. Now, if you look at capital gain versus PGBP, the charging section for capital gain is section 45, right? Now, if you look at section 45, it says that the income from the transfer of a capital asset. Income from the transfer of capital asset is under the capital gain. This is section 45. Now, let's say, for example, I am dealing in the, let's say, shares and securities, right? A very common question that your clients may be, coming up with is that a dealer of, or let me not write the term dealer, trading of shares and securities. Whether this will be business income or the PGBP. Trading of shares and securities, whether this will be business income or whether this will be PGBP. Yes. Yes, students, business income, PGBP. Yes, students, are you with me? Trading of shares and securities, business income or PGBP. Yes, students, fast. Shravanan, PGBP, why? Why do you think PGBP? Viraj, trading in shares and securities is speculation? No, it's not always speculation. We will touch upon speculation now, but it's not speculation. If engaged in the business of investment, then PGBP, otherwise CG. Dhaval, when you are saying business of investment, so either it could be investment or it could be, business. Investment is meaning that it's a long term in nature. When I'm, investing for the purpose of generating the returns which are there in terms of dividend, but that is not then business. So then if it's business, then PGBP, otherwise CG. That's what I think you meant to say. Gajar, business income. Why business income, Gajar? Yes. Okay. Let's understand this now. So, the income from the transfer of a capital asset. That's what section 45 will tell you, right? But it's not always going to be capital gains. Like income from the transfer of securities and shares, there is always this confusion and there is no clear-cut answer that this should be PGBP and or this should be capital gain, right? So if you look at the definition of capital asset, section 2, subsection 14, the definition of capital asset, section 2, subsection 14, which is 214, Dhaval, you will check the MOA. Okay, yes, you will check the MOA. That's correct to determine. But if you look at section 2, subsection 14 of the definition of capital asset, it excludes stock in trade. So, section 2, subsection 14, 214, which is the definition of capital asset, this excludes the stock in trade. See how we are interlinking the provisions and studying. This is how even the questions will be asked. You are not required to study like, okay, 214, well, first we'll read all the definitions, then we'll go to PGBP and read everything about PGBP. No, the interlinkage has to be established from day one, and that's how you're required to study and make your own notes, right? That's the entire purpose of this lecture, right? So, 214 excludes the stock in trade. Right? Yes, Gajal, you're correct. MOA needs to be checked. Right? So intraday trading is Vanshika separate. Intraday trading is separate. Occasional long-term basis is capital gain. That's fine. Intraday, we will talk about it. I'm not here on intraday. Okay? So if you look at the 214, it excludes the stock in trade. Right? Now, meaning the stock in trade income therefrom will always be PGBP. Now, the question still arises whether these shares and securities will be the PGBP or it will be stock in trade, or will it be a capital asset? That will always be the question. Because if you say it's a capital asset, then the tax rates will also vary, right? Long-term capital gain, short-term capital gain, 111A, 112A, 112, those tax rates will be applicable. If it's a capital gain, then it will go to that. If it is PGBP, it will be taxed at the normal rates. So it's very important for the capital gain classification versus PGBP to determine, because your tax rates will also be starting to vary. Your cost of acquisitions will also vary. Because for the cost of acquisition, they are given under section 49, section 55, which are specifically only when the income is chargeable under the head capital gains. Are we getting that? So that is where the problem will arise. Now, in that respect, there is a CBDT circular which is given. So CBDT has given the circular to assist us for the classification of the classification of trading in shares, whether it will be the capital gain or whether it will be the business or profession. And the CBDT circular says is that you need to look at several factors. You need to look at several factors. And what are those factors which one needs to look into? So basically, you need to look into the frequency of the transaction. What is the frequency of the transaction? If it is for the investment, the frequency will be far lesser. Whereas if it is for the business, you will have the higher frequency, right? So you always need to check the frequency of the transaction. Secondly, you should check what is the duration for which you are holding the assets. Whether you are holding it for a long-term period or whether you are trading on a regular basis. Right? So this will help you to determine that whether it is a capital asset or whether it will be considered as stock in trade. What is the intention? What is the intention of you purchasing the asset? What is the intention? Whether the intention is to make the investment or whether the intention is to trade in the shares. The intention will come out, as you rightly mentioned, from the MOE. The intention will come out from that. Right? So you need to determine based on these factors whether a particular investment form part of the capital asset or stock in trade will be determined based on the nature of the transactions, the magnitude, the frequency, the duration, the motive, intention, all of that. Right? Based on that, you will classify whether it is a capital asset or whether it is a stock in trade. And CBDT has issued the circular to guide the taxpayers in determining the same. So whether it is usual trade or business, or whether it is occasional, whether the intention is only to earn the profits, or whether the intention is long-term appreciation, whether the activity is substantial, whether the activity is continuous and regular, whether the purchases are made from the own funds or the borrowed fund, the objects in the memorandum, ratio of sales to the purchase and holding, time period, time devoted to the activity, characterization in the financial statements, right? So all of this needs to be determined, right? So that is what the CBDT circular also provides that. Okay. Now understand one thing very, very carefully. This is all right for the normal dealer. This is all right for the normal dealer. But in case of the foreign portfolio investors, Section 214, when it says that the stock in trade will be excluded from the definition of capital asset. In that, they exclude the shares held by the foreign portfolio investors. They exclude the shares held by the foreign portfolio investor. Are we clear? So you can just write over here. You can write. Okay, you can write over here. Excludes. So here you can write the stock in trade held by FPI will always be capital asset. So for a foreign portfolio investor, even if it is held as stock in trade, it will still be considered as capital asset. Here you can write like this, the shares held as stock in trade by the FPI will still be considered as capital asset. Also, the CBDT has said that if it is up to the assessee to treat it as business income or the capital gain. The AO will agree to it. But it should not be the case that every year on year you are changing. It should not be the case. This year you may take it as business income. Next year you may take it as capital gain depending on the beneficial taxability. That should not be the case. Once you select a particular thing, go with that. The AO will not question because otherwise it will create unnecessary litigation. Right? Now coming to the most important point over here, which is the speculation, what all of you were talking about. Now, speculation business is given under 43 section. It is defined under 43. So, speculation business. Just write it over here. Speculative business. What will fall under this? Now, this is a separate business in itself, right? And that's why we have different rules for the losses in speculation business. So, losses from the speculation business cannot be set off against the normal business, right? Section 73 provides that the losses from the speculation business can only be set off against the speculation profit. It cannot be offset against the normal business profit. Because explanation 2 to section 28 provides that this is a separate and distinct business. Right? Now, what is a speculative transaction? So, section 43(5) defines the speculative transaction as a contract for sale and purchase, sale or purchase of any commodity, including shares and stocks. So it's not just about the shares and stocks, but any commodity trading which may happen, which is periodically or ultimately settled otherwise than by the actual delivery or transfer. So speculative transaction is something which is settled otherwise than by actual delivery. So trading in share is not a speculative transaction. Trading in shares is not a speculative transaction. What is speculative is that if you settle otherwise than by taking the actual delivery. So if you settle the transactions without taking the delivery, that in fact will be considered as speculative. Now, understand one thing very carefully. What do I mean by otherwise by actual delivery? Intraday. Intraday trading is considered as speculative income. Intraday trading is considered as speculative income. Or where the purchase and sale of the shares of other companies is the business of that company. So, where the gross total income of the company consists of only purchase and sale of securities or purchase and sale of shares, basically, not securities, the shares. That company shall be deemed to be carrying on the speculation business if the business consists of purchase and sale of the shares. So, purchase and sale of shares of other companies, or wait, write like this, one second, where the business of, this is I'm writing only for company and not for all the associates. Remember this, where the business of company consists of purchase and sale of shares of other companies. This is deemed to be speculation business. This is only for the company assessee. Remember that. However, there is an exception to this. And the exception is a company whose gross total income, if my gross total income consists of mainly income under head IFHP or capital gains or income from other sources or interest on securities. So if majority of my income is from these sources and it is not just basically purchase and sale of shares of other companies, then it may not be considered as speculative. When it will be considered as speculative is when it will be deemed to be a speculative is when the business is only to purchase and sale of a company. This is only for the company. If it is individual, a partnership firm, this clause is not applicable. Where the business of the company only is purchase and sale of shares of the other companies. Basically, I am then a kind of investment company, which is just doing the purchase and sale or the trading company. Then it will be deemed to be carrying on the speculation business, wherein I'm just investing in the other company's shares and selling it. Also, the other exception to this is, where the principal business, where the principal business is, where the principal business is banking, granting of loans in advance, and trading in shares. And trading in shares. If I am a banking company or I am granting loans in advance and in the course of that I am purchasing and selling the shares of the other company, that will not be considered as speculative. Even when I am trading in shares, my business is to trade in shares. And during the course of that, of course, I'm purchasing and selling the shares of other company. That will not be considered as speculative. So then your question is, what is speculative then? Then, ma'am, you are saying on one hand, if the business of the company is to purchase and sell the shares of the other companies, that is deemed to be speculative. And then there is exception which says that if my business is trading in shares, that will not be considered as speculative. How do we reconcile that? How do we reconcile this? Yes. How do you reconcile this? Tell me. Fast. Yes. What do you think? Yes, students, fast. So on the one hand, I am saying that I am doing the purchase and sale of the shares of the other company. And therefore, I will be deemed to be carrying out the speculative business. Right? That's what your deeming provision provides that. So it says that if I am a company And because of and being a company, I am basically engaging in purchase and sale of the shares of the other company. It is speculative, right? But it's saying if I'm trading in shares, then in that particular case, I will not be considered as speculative. So how do we reconcile that? Yes, any answer? What do you think? So if my principal business is sale and purchase of shares, it could be for investment also. It is not saying that it cannot be for investment. Then in that particular case, it will be considered as, in fact, a speculative. If my business is trading in shares, then it will be my normal business income rather than the speculative business. Are we getting that? So therefore, in case of deemed speculation, when it is a deemed speculation, the deemed speculation will not be there when the trading in shares is the principal business of the company. When in fact the trading is not the principal business of the company, that will be the case where it will be deemed to be the speculative business. Are we getting that? So, if it is speculative transaction which is there, it will be deemed to be a speculative transaction where my business is purchase and sale of the shares of the other company, but it is not to trade. It is not to trade. It is to purchase and sale could be from the holding perspective, but that is my business. Are we getting that? But if it is to trade, then it will not be considered as speculative. Yes or no? Is it clear? Yes or no? Any doubt? This point is clear. Yes. Okay. Now, what are other exceptions? Trading of shares of own company. How can you trade the shares of own company? You cannot trade the shares of own company. Now, understand one more thing. There are certain other exceptions over here as well. So, certain transactions are not deemed to be the speculative transaction. Which are these? Exceptions to speculative transaction. One is hedging contract, the hedging contract for commodity or for stock, basically, where you are kind of hedging to protect the losses which could happen, to protect the price fluctuations which could happen. Derivatives, your FNO transaction. This is a misconception that FNO is a speculative business. No, FNO are not the speculative business. Similarly, forward contracts are not the speculative business. So basically, only intraday is your speculative business. Trading in commodity derivatives is again not speculative. So these are the exceptions to the speculative business. Okay. So if your business is the purchase and sale of the shares of the other company, even though it may be by delivery transaction, right? If your business is to purchase and sale of the shares of the other company and you're yourself a company, so even if It is with delivery. It is deemed to be the speculative business. It will be deemed to be the speculative business. Where it is a company. So other than that, only the one where you're not taking actual delivery, which is intraday transactions, those are considered as speculative. But for a company assessee, if it is in the business of the purchase and sale of shares and it is not a trading company, it will be considered as speculative business, even though they may be taking the actual delivery of the shares. Are we clear? Yes, so when you may be, holding the assets as investment, at that point in time, it could be considered as deemed speculation. Because if you are doing a trading, then you are going into the normal provisions. If you are doing a trading activity, it will be normal because that is falling under the exception, right? But only when you're holding it as investment, that time this will be problematic. Are we clear? Yes or no? Any doubt with respect to this? Yes? Okay. Then this is about the capital gain versus the PGBP. Now last is IFOS versus the PGBP. Now any transaction can fall within IFOS, which is not covered elsewhere. It will be IFOS. So how will it distinguish? Let's say, for example, interest on securities, whether it is PGBP or whether it is IFOS. Yes. Yes, interest on securities. Past students, interest on securities, IFOS, PGBP. Yes, yes, yes. What is IFOS saying about the interest on securities? Yes, what does section 56 talks about? First, let's have a look at section 56. So 56 specifically talks about the interest on security. It says that income by way of interest on security if the income is not chargeable to tax under the head PGBP. So 56 is saying, section 56 is saying with respect to interest on securities chargeable under head income from other sources if not chargeable to PGBP. Yes. Now what do you think? Let me know. Always IFOS, but Viraj, I wrote it now. 56 says if not chargeable to PGBP. Sale of bonus shares. Shafna, sale of bonus shares will be capital gain, right? Associate engaged in the business of finance, then PGBP, otherwise income from other sources. Okay, Dhaval. 56, interest on security, Gajar. Yes, that's correct. But when it will be PGBP and when it will be income from other sources. So let's discuss some cases around that. There are multiple cases on this point. We'll discuss one by one. First of all, understand that interest on securities, as I said. What does section 56 is saying? That it will be chargeable under PGBP. If it is not chargeable under PGBP, then you come to the income from other sources. Then you come to income from other sources. Now, interest on securities. If my business is in securities, basically, right? Then one can obviously say that yes, it is my business income. But if it is that the surplus funds that I am depositing, that would be income from obviously the other sources. That is not in the course of my business. Now there is one classic old case of Supreme Court. There is old case of Supreme Court in Tuticorin Alkali. Supreme Court ruling. See, this is an often asked adjustment in exam, interest on security. You don't need to just write that it is taxable in income from other sources. You'll get half mark for that. So your answer will be correct. Yes, it's income from other sources. But look, you are in a CA final. You are writing CA final examination. So based on this, it will be judged that whether you're, enough eligible to become a chartered accountant. So your answers should reflect your understanding, which most of the students forget, and then they feel that, ma'am, we have written the correct answer. Still, we are not getting the correct marks. Why I am getting my marks deducted over here when the answer is correct? Because what is expected out of you, you are not understanding that. Your expectation out of you is that you are giving the CA final papers. Post qualification, you'll become CA. And you cannot be a CA without having the understanding, deeper understanding of each and every provision. I cannot let you become doctor unless you know how to operate, isn't it? So you have to answer that particular provision in a very detailed manner. It should not be also the case that, you are losing out on time because you have 3 hours to write the answer. So be sensible enough where to write what, but you should not be, just missing out on the points. When you have the adjustment for interest on securities, don't just mention in the note that this is chargeable to tax under income from other sources. You have to write, look, here we are emphasizing on the presentation. So I may not be writing everything down on the notes. It's your job to write it in your notes, what I'm dictating over here. Because you think you will remember but you will not. So just write it down. You will write in your exam that interest on securities, since the surplus funds are deposited and is not out of the business, it is not arising in the course of the business. If you write the words in this way, it is not arising in the course of the business activity, this would be chargeable to tax as the income from other sources. This is also supported by the Supreme Court decision in Tuticorin Alkali. This is how you will fetch that 1 mark. And there is always a difference between 59, 60, 49, 39 and 40. This 1 mark can save you. Isn't it? So be very precise when you're writing your answers. So what happened in this particular case, in Tuticorin Alkali Chemicals and Fertilizers case? The associate company, in this case, invested the funds which were borrowed basically for setting up the factory till the time it was surplus, till the time the project starts and it starts investing. It had borrowed certain funds until that time it's just invested in the fixed deposit with the bank and earn the interest thereon. So the question was that whether this would be capitalized, this interest has to be capitalized or it would be considered as income from other sources. Why capitalized? Because it was before the commencement of the factory or before the commencement of the business. And the Supreme Court said that this interest on bank deposits would be taxable as income from other sources. So the Supreme Court noted that what you have to bear in mind is that if a company has not yet commenced the business, there is no PGBP at the moment. So what you're trying to say is that what we will do is we will capitalize this income, this interest income, and will reduce it from the interest which we have paid on the borrowed funds. And the difference amount will be capitalized. Whereas you can still charge the income under income from other sources. So PGBP will arise only when the business starts happening. Until then, PGBP will not be there, meaning you're going to capitalize it. But income from other sources, even if the business has not started, can be there. Right? So here, if you look at it, the company had chosen not to keep its surplus capital idle, but had decided to invest it in the fixed deposit so that some interest could be generated. So this is not a capital receipt. It should not be therefore capitalized. This is a revenue nature. Capital versus revenue, first class. We get the distinction, isn't it? What is capital receipt? What's a revenue receipt? Capital receipts are one-off. But was this one-off? It was done purposefully to earn that particular revenue. So though the company borrowed the funds and then invested that amount for a short period of time, but that will not make it a capital receipt. This is not a capital receipt. This is the interest received from the investment. This is the interest received from the investment. So therefore, this is income. Even though it is from the borrowed funds that the investment has been made, but that will not make it as a capital receipt. Right? So therefore, if you look at it, this particular is not income, is not arising in the course of business. This is not arising in the course of business. The company was in fact at the liberty to use the interest income as it liked. It could reinvest also the interest income. Right? Now, since it is not arising in the course of the business activity, this will be treated as income from other sources. Are we clear? So in Tuticorin Alkali, the interest on funds deposited out of borrowed funds, interest on funds deposited out of the borrowed funds is income from other sources and not capital receipts. Fine. Is it clear? Any doubt? Any question? Now there are multiple rulings based on this particular point. There are multiple issues based on this particular point. It's not that this is the only issue. So it depends on the facts and circumstances of each case. It depends on the facts and circumstances of each case. There is one more case which I would like to highlight over here. Supreme Court in another case of the Borker Limited. In that case, Bokaro Steels, not Borker, the Bokaro Steels. In this particular case, what had happened is that the Supreme Court here observed that in Bokaro Steel, that where the assessee was in the process of again constructing its plant and had not started yet the business. And it received certain interest from advances made to the contractors. It received certain rent amount from the workers and the staff which was employed by the contractor. They build these small huts there. So they receive certain, rent. They receive certain higher charges. Now, whether that is a capital receipt or whether it would be the income from other sources. This was also a Supreme Court ruling. Now, here the Supreme Court in fact observed that the assessee was constructing the iron and steel plant. And the company was in the process of completing the plant and had not started any business. So during that period, the company had given, the quarters to the contractors. So it earned certain lease rentals. And it had given certain machinery also on the hire. It earned certain interest also on the advances given. Here the Supreme Court observed that the activities which are done, like higher charges which are received, the interest amount which is received, were incidental to the work of construction of plant. Because the advances which were given to the contractor, on that the assessee earned the interest. It was not that the assessee invested the surplus amount. Are you understanding? The assessee did not invest the surplus amount with the bank, which was in the Tuticorin. So in Tuticorin case, these were the surplus funds. You can write it over here, interest on surplus funds deposited. In Bokaro, it was interest on advances to the contractors during course of construction. During the course of construction activity. So to facilitate the work of the contractor, the assessee permitted the contractor to use his premises on rent. Right? So therefore he received the higher charges. Therefore he received the lease charges. The advances which the assessee made to the contractor was to facilitate the construction activity. This was to facilitate the construction activity. Right? Therefore, these charges would be forming the capital receipt, because these are not the income of the assessee from independent source. So whatever pre-commencement expenditure will be there, that is a capital expenditure. And therefore, whatever income you will earn in the course of that will also be a capital receipt. In Tuticorin also, the assessee argued similarly that interest which I am paying on the borrowed fund is a capital expenditure because I have not commenced the business. And therefore, the interest on the surplus funds that I am getting should be allowed to be reduced from that expenditure and that should be capitalized. But the Supreme Court said no. This is not a capital receipt. This you are earning it purposely. You have deposited surplus fund to earn that revenue. Your intention was to earn that revenue and therefore it will be income from other sources. Whereas in Bokaro Steel, the advances were given during the course of the construction to facilitate the construction activity. And therefore, the Supreme Court held that the interest is not from independent source. The interest is not from any independent source, but were intrinsically connected with the construction of the plant and machinery. But was intrinsically connected with construction of plant and machinery. Therefore, it will be capitalized. Therefore, it will be capitalized. Yes, are we getting? So this, look at it. It depends on so much facts. You cannot have a straight jacket formula or a rule. You may know the law, but what is important here is the application of the law. And you may have multiple clients. Now you may have like multiple clients, and one client you may take interest on security as the PGBP. In another client, you may take it as income from other sources. And that's the beauty of tax laws. Every day you will learn something new. In the entire journey of tax as a profession, there would not be a single day where you will think that, oh, this is so boring. Because every client will be a new thing for you. There will always be different perspective. There's one senior lawyer. What he does is every time when he takes up a client, he reads the act as if he is reading for the very first time. Why? Because every time he will have the different perspective. He will not say that, oh, he knows this section by heart. Though he knows all the judgment names with their citations. He has that capacity to remember all the judgments with the citation, but whenever he reads the act, he reads as if it's me. He opens an act and starts reading as if he's reading for the first time. And that's why he's at the position where he is, right? So that is the beauty of the tax laws. So let's move ahead then. One more case. Now, in respect of the guarantee, in respect of the guarantee which is there, guarantee fee which is there, right? Or in order to give the guarantee, basically, you may have to deposit the margin money. So, in order to obtain the bank guarantee, the bank requires you to deposit certain margin money. Now, interest income on that margin money. Interest on margin money deposited with bank to obtain bank guarantee. Yes, IFOS PGBP. Yes, students. IFOS PGBP. Vanshika PGBP. Why? Geeta PGBP. Why? Why PGBP Geeta? Yes, students, please fast. I know you must be hungry, but you have to answer. Yes, fast. It's not that difficult. You have to stay back. As I told you last time also, even if you feel tired, you have to think that these 15 minutes could be very, very important. And it's always that the last minute you should not leave, right? Because it is generally given in the course of business to the clients. Okay, Vanshika. IFOS, since it's not related to principal business, Shapna, okay. Geeta, yes, it is taken for the business. Shravanand, other sources, okay. Okay, let's see now what is the reasoning of the court. This is a Delhi High Court ruling in KN Company. Ma'am, do we have to remember these case names? Yes, try to. And so wherever I wanted you to remember for sure, I have already told you. These at least try to remember Tuticorin and this KN Company. Okay, at least try to. At least make an effort to remember. Gajjar PGBP, Shravanan, you are saying it's not main business income. Let's see what the court has to say. See, always understand one thing, one very important thing. What you are feeling is not incorrect. Okay? Because I have not told you, or you're not, privy to entire facts. So do not think that the court what it is saying is going to be always right. There are the decisions even of the Supreme Court with due respect. Sometimes these are not the correct reasoning. Yesterday I was coming across one case where the court said that, Supreme Court said that the assessment order is basically a contract between the taxpayer and the tax authority. So it is governed by the Indian Contract Act. I mean, how can it be a contract? For a contract, there has to be the acceptance by the other party. The income tax order is not a contract according to me. So, always it's not going to be that it's right. But for exam purpose, of course, the decision which is given to you, you're bound by that. But never stop getting your own reasonings and always analyzing. That's the analytical skill that you have to develop, right? Uh, Vanshika, okay, very fair question. What is the meaning of CIT, PCIT, or the DDIT? Whatever these words are written verses. So always the judgment which is there is between the two parties, the income tax authority and the taxpayer. So whenever the appellant is, let's say, assessee, the assessee's name will be first. Wherever the appellant would be the income tax officer, so that income tax officer's designation is what you are getting. So you will find ITO versus assessee. You will find DDIT versus assessee. Right? DGIT, Director General of Income Tax, Deputy Director of Income Tax. You will find CIT, Commissioner of Income Tax versus assessee, or assessee versus Commissioner of Income Tax. So whosoever is appellant, his name will come first, and later on will be the assessing officer's designation, who has basically passed the order. So that is the meaning in the case name. And then it is followed by the citation. The citation, if you look at in your module, you don't need to remember the citation, but it is always taxman.com, which is reported by taxman. It is ITR, which is Income Tax Review, which publishes all the cases, which reports the cases by different courts and the tribunals. That is basically Income Tax Review is a publication. And this particular 364 ITR 93 Delhi High Court is a citation where you, in the process in which you find the cases. So this is how the cases are to be looked upon. Right? So that is how the citation is given basically. Okay, so that is basically to search the income tax case. Fine. Now, in this case, the court answered that the interest income from the deposits made by the assessee, the margin money. Why the margin money was kept? It was kept to obtain the bank guarantee. Now, if I would have not given the margin, I would have not been able to obtain the bank guarantee. Now, I have to give the margin in order to obtain bank guarantee. Now, bank guarantee was essential for my, let's say, doing the business. Why do we obtain bank guarantee? Because there are certain export-import transactions where we are required to give that bank guarantee, right? So if I do not furnish that bank guarantee, I would have not received the contract. And therefore, to obtain the bank guarantee, I had to keep the margin money. And this interest is incidental to that margin money that I have kept. So here, if it would have been the case that I had surplus fund, I have deposited with the bank, then I would, say that this is income from other source. But here, the interest income from the deposit is inextricably linked to the business. And therefore, it will be business income. Fine. So just write down over here. Margin money was essential to obtain bank guarantee, which was required to undertake the business contract. Therefore, interest on margin money is inextricably linked to business, and therefore it would be classified as PGBP and not income from other sources. You can write that if interest is on surplus funds deposited with bank, then it will be income from other sources. Fine? Yes. Shravanam, you can tell alone the case name. You don't need to give the authority reference. It's very difficult to remember. And nobody can remember that. Okay. So it's fine if you just remember the name of the case. For the purpose of writing the module, it is necessary to give the referencing properly with the citations. But for your examination purpose, you are just required to report the name. Fine. Last one thing, let's say I receive, some higher charges on, let's say there is, you know, uh, some plant and machinery which is there. Now, obviously, that will not be taxable under income from house property because under income from house property, you only have the rentals from the land and building. So, in that particular case, whether it will be income from other sources or whether it will be the PGBP. Yes. So, letting out charges from the uh, letting out of plant and machinery. Yes. What do you think? Yes. Fast. Okay. Let me just write it over here. Letting out of plant and machinery or equipments. Now, in one of the case, it was again a ruling by Madras High Court, and in that case, what had happened is, I'm not giving the case name because otherwise, you will end up getting confused with so many case names. So only when it is essential, I'm just giving you, but this is just for the purpose of your understanding. So in that case, what happened is that there was certain, basically lockdown due to strikes in the factory. So there was a temporary lockdown in the factory, and because of which because of the strikes in the factory, like the workers' strike. Now what happened is, in that particular case, the assessee, in order to minimize the losses, it let out the plant and machinery so that at least it could earn certain income therefrom. And in the course of that, it earned the rental charges. To minimize the losses, basically, it earned the rental charges. Now, the question before the court was that here, since the assessee, in order to minimize the losses, the assessee has earned this particular rental income, whether this will be income from other source or business income. So it was held that this will be business income. Because the assets which were there, the assets retained the commercial character and were exploited as such. Right? It was not to generate the additional revenue, but these were business assets which were exploited in the course of business. Since there was a business of exploitation of commercial asset, this will be PGBP. So, exploitation of commercial asset to reduce the losses. This was held to be PGB. Because if you look at section 56, it says that section 56 2 says that income from the letting out of the machinery, plant or furniture. Letting out of machinery, plant or furniture is chargeable under the head income from other sources if not chargeable under PGBP. So similar to interest, if not chargeable under PGBP. So it is similar to the interest. So where in order to reduce the losses, I let out my plant and machinery, which is a commercial asset. Then it will be the business income. But if my asset has ceased to be of commercial character, if it is not a business asset anymore, if I'm just letting out my plant and machinery, then it will be the income from other sources. So if let's say my business has stopped, I have closed down the factory and now I'm letting out my plant and machinery. That is income from other sources. So if business is closed and plant and machinery is let out, then it is come from other sources. Last one. What about dividend? Dividend on securities or dividend on shares, not securities, dividend on shares. Shravanan, it's not Binny Mill, it's Lakshmi Mill's case. It's Lakshmi Rice Mill's case. Okay. Yes, what about dividend? Fast. Yes, dividend, PGBP, IFOS. Yes, student. IFOS, Geeta. Okay, why? So if you look at 56.1, unlike interest, 56.1 directly says dividend is chargeable under the head IFOS. Like interest and let out charges, 56.1 doesn't say if not chargeable under PGB. It directly says dividend specifically chargeable under 56.1. So even if my business is to earn the dividend income, it will be still classified as income from other sources because it's a specific charge and the specific shall prevail over the general. Yes, student? No, Shafna, it does not depend on the business of company. It depends on the language of the section, which is saying that dividend will be specifically chargeable under business, under the income from other source. Yes, Gajan, correct. Fine. So what did we do today? We did the classification of income and we compared it with the salary. For salary, you have to look at whether it's a contract of or versus the contract for employment, right? Because there has to be employer-employee relationship. Then we saw income from house property, Chennai property case and Raj Dadarkar case. If your objective is to do the business of letting out of property, then it is business income. Otherwise, it will be income from house property. Then we saw capital gains versus the PGBP. We saw what is the intention, duration, frequency of the transaction to determine whether it's a capital asset or the stock in trade, because stock in trade is excluded from capital asset except for FPIs. Then we saw section 43, speculative transaction, where it's an intraday transaction, it's speculative. What is not speculative is hedging, forward contracts, derivatives. That is not speculative. In case your business is of dealing in shares and securities, and if you're a company, then it is deemed to be speculative unless your income is there from house property, interest on securities, and other than that. And if it is trading company, banking company, or advancing loans, that will not be considered as speculative. And finally, we saw about the interest on securities, interest on surplus funds, and to distinguish between IFOS and PGBP. Yes? Yes or no? Is this clear? Thank you, Vanshika. I'm glad you're liking the session. Okay, so in the next class, I would request you that from the basic concept chapter, we have missed out on one aspect, which is diversion of income by overriding title versus the application of income. It's a small concept. I would want you to just read and come before the next class. We'll take it up first before we dwell into section 28. Because section 28 is going to be very, very interesting. Okay? So thank you so much, students. Good night and see you in the next class. But please revise today before sleeping, okay? Yes, we can close the session.